My name is Zane Tarence, and I'm a managing director and partner in Founders Investment Banking. And we basically help growth companies to assess beyond the bank capital. A company often is growing, maturing, but they really don't know how to assess the broader capital markets. So we help companies package their story and assess those markets. I would say our niche in the advisory investment banking market is growing companies. Companies that have a revenue model, they have established a market, have a strong management team, and typically our clients are in the $5 million to $50 million in revenue, and they've achieved profitability. I would also say the niches that I love to focus on are technology niches, especially software as a service companies, IT service companies, and digital media companies. The investment banking business has changed a lot recently. I would say one of the most prevalent trends I'm seeing is institutional capital is going upstream. Unfortunately, as an entrepreneur myself, institutional capital is looking for more mature companies to invest in. The notion of venture capital has really moved to a little later stage capital. So typically, my clients are clients that have achieved profitability. They have a product that works, and they're just looking for capital to step on the accelerator. So the early stage capital is not as available as it was, I would say, 5 to 7 years ago. Another thing, the investors are a little more risk averse. They typically want a more mature management team that has done it before in a market that's very stable. And so we're hoping that's going to shift with the latest move in technology, where people are seeing this new boom that we really haven't experienced since probably 1997. But typically the institutional investors, I think because of the last economic downturn, are becoming more and more risk averse. I think changes that are coming to our business is that there's going to be a lot of businesses looking for mergers or acquisitions. The baby boomers own a significant number of private companies in the United States. And they're reaching that stage in their life from a personal standpoint to where they're looking for liquidity. They're looking, what am I going to do with this company I built? You know, I'm ready to retire. Do I have kids I want to give it to? Employees that I would like to sell it to? Or, you know, do I need to look for a strategic buyer or a financial buyer? So I think one of the biggest changes in our industry is going to be there's going to be a lot of supply of companies that are on the market. What that could tend to do is drive the price down, the multiples down for these companies, because as there's more and more inventory or companies looking for buyers, typically the price goes down. But another thing I would mention, a change in our industry, there is a lot of dry powder or capital on the sidelines right now. The last 3 or 4 years, you know, there's not been as many deals done as there was capital in the market. So the good news for entrepreneurs and strong companies that have real products, you know, a real competitive advantage, is that there's a lot of capital looking for a home. You need to be a strong company, but strategic buyers, you know, companies have a lot of cash on their balance sheets right now, and they're looking to deploy that cash because that cash on their balance sheet is not giving them a good return on their money. So they're looking for strong companies that they can purchase. And then the institutional investors like venture capital funds and private equity groups also have a lot of capital to deploy. They're paid by their limited partners to invest this money. And if they don't invest it, their limited partners get nervous. So there is a lot more capital available for mature, strong companies today than there was 3 years ago. The Birmingham Venture Club has been a good deal for me. I've been involved probably 5 years. I've been on the board 2 years, and As we all know, as busy professionals, and we have families, we have social events, our businesses, you have to be careful in how you spend your time. And there's an unlimited number of good things that you can be involved in. For me professionally, the Venture Club has been a wonderful use of my time. It just collapses time frames for me and to allow me to be with the people in the markets that I serve and I do business with. I'm really an investor, a service provider, and an entrepreneur. So I'm kind of, represent the three groups that are really a member of the Venture Club. So I can think on numerous occasions when I stopped and came to a Venture Club meeting where, number one, the program was very beneficial. I learned something that I could apply immediately. But number two, I saw somebody. I made a connection to a company I'm working with that needed a certain person on their management team, or a certain angel investor that was looking for their next deal. So the Venture Club has been especially meaningful to me because the membership and the advantages, the curriculum even in the meetings is right down the center in what I do. And that's trying to assist growth companies and getting to the next level.